All right, and we'll also go ahead and record this. So just so you guys know, we always like to record it just to test the quality, test the content, just to make sure everything is good. But thank you guys for tuning in today. Today is the topic, or today's the day where we'll be going over tax tips for business owners. So to all my business owners on the call today, I know we're all going through COVID-19. Right, but at the same time, we do have to make sure that we're doing things strategically, right? That we're doing things intelligently, that we're not letting go of certain things such as our tax obligations. So we do have to file taxes each year. There's certain things that we do have to do in order to basically stay compliant with the IRS and ultimately to take advantage of some of these loans, such as the SBA loans, the PPP loans, and all that good stuff. So basically, that's our topic for today, is covering tax tips for business owners. We'll be going through some of the more unique tax strategies out there, and also covering some basics, right? So what are some of the basics as to taxes as an individual? When you own a business, what kind of form do you use if you are a Schedule C or a sole proprietorship? So we'll be covering some of those items. Any questions that you have, please feel free to let me know. So for those on Zoom, we're streaming on 3 platforms right now. Love technology, right? COVID-19 has only enhanced the technology where we can stream on 3 platforms. We're streaming live on Zoom, so we do have folks that are on Zoom right now. This is a recorded meeting on Zoom. If you need access to it, then please let me know and I'll be able to send you the recording. We're also streaming live on Instagram to my right and then Facebook to my left. So we're streaming live. This is my home office, so welcome home, you guys. But ultimately, if you have a question, you can feel free. If you're on Zoom, you can just unmute yourself and ask your question. If you or you can also put it into the chat box. If you prefer, you can wait to the end to ask your questions, or you can just ask questions as we go along. And same thing for Instagram. If you're watching on Instagram, you can also type in your questions via the chat box. And same thing for Facebook. If you're watching on Facebook, you can also type in your question via the chat box. So let's go through the presentation. All right, and feel free to stop me at any time if you have any questions or comments. If the technology is going in and out for whatever reason, let me get my timer. This is my handy dandy timer right here. But today, I'll be giving you guys an introduction of who I am. All right, special announcement. My book has been officially released, which is called Infinite Expansion, How to Infinitely Expand Your Vision of Abundance. We'll talk about that in a second. But then we'll also talk about incorporation, right? How do you incorporate yourself? Should you be a limited liability company, LLC? Should you be a corporation or corp, C corp, S corp? We'll talk about some tax write-offs, some that are pretty basic, some that are also pretty advanced and unique. Then we'll be going through a quick, very, very quick tutorial on how to keep track of your finances from a business standpoint. You definitely want to make sure that you're keeping track of everything. And then throughout, ask any questions, any clarifications, if you need me to repeat something. This will all be recorded, so you will get a chance to rewatch it. If you're on Zoom, it's recorded. If you're on Facebook, it's recorded. If you're on Instagram, it's also recorded. So you guys can feel free to ask me any questions or anything like that. But who am I? For those that don't know me, my name is Jeff Badu. I'm a licensed certified public accountant. I graduated from the University of Illinois at Urbana-Champaign, got a bachelor's degree and a master's degree in accounting. And ultimately, I moved to the U.S. when I was 8 years old. My purpose in life is to inspire and support the super hungry to take hold of infinite resources in order to create an abundant lifestyle. That purpose, by the way, that statement you just heard, is actually a book now that's out there. It's called Infinite Expansion, How to Infinitely Expand Your Vision of Abundance. Basically, how can you let your mind get rid of all the negatives and all the pushbacks? Instead, how do you allow your mind to unleash your potential and fully expand So that's the book. It's out on Amazon right now. It can be purchased for $4.99. The ebook version is on Amazon right now, so you can download it right on your Kindle app, or you can download it when you go on the Amazon. So that book is officially released. It will be the official announcement will be made tomorrow. But for those that are watching right now, you guys gain some insight that you can actually purchase it right now on Amazon. But I will make the official announcement, meaning I'll do all the social media posts. I mean, you'll see over the next 6 months or so, you'll see a lot of social media about it. We'll do a book launch on it too. So a live event, you might see some celebrities on there. And ultimately, it's really a book that's really meant to expand your mind, expand your thoughts, expand your vision, right? And that sometimes we have these self-limiting beliefs that say that we can't do X, when in reality, we can actually do it. So the book is meant to help you unleash your potential and allow you to do whatever it is that you please in this world. Whatever it is that your God-given will is set to do, then you go ahead and do that. So the book can be purchased on Amazon. You can just search my name, Jeff Badu, on Amazon. You'll see it pop up. Or you can type in Infinite Expansion, how to infinitely expand your vision of abundance. The links and everything will be released tomorrow. That's when the official announcement will be made. But since we're here, we might as well let it out. I'm a parallel entrepreneur and a wealth multiplier. So basically, I help people multiply their wealth in ways that they never knew existed. I'm the founder and CEO of Badu Enterprises, Llc, which is a multinational conglomerate in the finance industry. What we do is we provide a suite of financial services, including our marquee service, which is taxes, through Badu Tax Services, Llc, which does tax preparation, planning, and representation for individuals and businesses across all 50 states in the U.S. And we also have clients in about over 10 countries right now. I believe we're approaching 15 or so. On top of that, I am a real estate investor. So through my Badu Investments company and brand, I do basically we buy and hold multifamily residential real estate properties, primarily on the south side of Chicago. We acquire a lot of units. This year, for example, we plan to acquire over 50 units on the south side of Chicago. And really our goal is to restore and develop those communities and ultimately provide some cash flow as well. Now, you may be wondering, all these companies end in the letters LLC. All my companies are legally structured as LLCs, which you'll find out that that's the best way to set up an entity. The reason why I'm even speaking to you guys right now is because I'm very passionate when it comes to financial literacy. I love talking to people about money. I do a weekly radio show called Money Talks on 98.3 FM in Chicago. And I also stream it live on Facebook every Monday night from 7 to 8 p.m. Central Time. Just talking about money topics. Last week we talked about how to buy real estate outside of traditional financing, ways to take advantage during this COVID-19 pandemic. You can close a deal during this time. So we closed a deal a few weeks ago, multifamily unit that's cash flowing right now. So basically we cover different topics, right? The Badu Foundation, which I'm super excited about, is launching next month, where we provide financial literacy education and resources to the youth. So the youth meaning ages 6 through 18, and also the homeless, those who've experienced homelessness throughout their life, or currently experiencing homelessness, basically to help them restore their lives. So really quick before I get into the presentation, sorry if my hand is all over the place. But let's see, we got a comment here that says, congratulations on a new book, looking forward to reading. Absolutely, definitely appreciate it. It's a very exciting book. I poured my heart and soul into that book. I wrote it. It's a very, very spiritual type of book that I poured everything that I had into that book. And by the way, just to give you guys a secret, it was written before COVID-19. But the principles in there, you'll come to notice, it's almost like it was a prediction. That it sort of says, you know what, you can prepare yourself for any situation on this planet as long as you allow your mind to do so. right? And that your mind is one of the most critical things that allows you to do whatever it is that you do in the world. So infinite expansion is basically how to infinitely expand your mind to the point where you can't even expand anymore, right? And a famous quote in that book, which is actually what I'll be using tomorrow, is my vision is so big that if the average person were to see it, they would probably go blind. Right? That's how big I want you to think after reading that book. That your vision would just be like, whoa. Right? You just want to explode and just go do something, right? Just like take over a business, launch a business. If you have one business, you go to 3 businesses. I mean, I love working with businesses. It is truly a passion of mine to help entrepreneurs and business owners thrive and excel in their career. But let's get into the topic, right? Talk about tax tips for business owners. So before you sell a piece of candy, before you go out and make that lemonade and sell it to somebody on the street, this includes the kids, by the way, this is not just for you, you need to make sure you are incorporated. Incorporated means that you're shielding yourself with the corporate veil, meaning that you're protecting your personal assets, basically. So there are 2 main types of entities. There's the LLC, Limited Liability Company, and then there's a corporation. There's only 2. However, a corporation can be set up as either a C corporation, from a tax standpoint at least, or an S corporation. Now, an LLC or limited liability company also has the right to be taxed as an S corporation or even a C corporation by making a special election with the IRS. So I love LLCs. My recommended entity of choice for everyone that's tuned in today is the LLC, Limited Liability Company. Why do I like it? Well, for one, it protects my personal assets, meaning that if I'm out doing business in my business's name and for whatever reason somebody sues me and they win the lawsuit, well, they can now take what's in the LLC, but they cannot take what I own personally. As long as I'm not doing things like piercing the corporate veil, meaning that I'm commingling, I'm mixing personal plus business funds. All right, you should never accept a check. For the rest of your life, you should never accept a check in your personal name. You should have that check redirected into your business name, especially if you're doing business, right? Especially if you're operating in a business capacity. Maybe you sold a piece of candy to somebody, or maybe you even sold something on Amazon. You should have your entity be the one that's in that transaction. The party to that transaction, the seller, should be your entity as opposed to you. Because the thing is, especially in America, people do sue. Right? I've been sued before. I've been sued twice in my life before. Thankfully, I've won both lawsuits. However, had I lost and had I not had all of these things in LLCs, right, I don't own anything. My companies own everything that I do. So had I not been operating that way and I lost the lawsuits, well, they could have took my house, right? They could have took my car. They could have took my laptop, my shoes, my clothes, everything. You can literally lose everything if you're doing business in your personal name. So for those tuning in, you might be wondering, oh yeah, I'm just running a small shop. I make $1,000. I made $1,000 last year, or I made $2,000 last year. Well, you still need to be careful, because what if you have a lot of other assets? What if you have another business? Or what if you have a prized possession, maybe an inheritance that got put into your name? Right? You want to make sure that you protect it, because somebody can literally sue you for any amount and be able to take anything that it is that you own. And a question was asked, what about receiving payments with Venmo and Cash App as a business owner? Yeah, you should absolutely incorporate yourself, right? So it doesn't matter what you're doing. You can be selling laptops, you can be doing taxes, you can be giving advice to people. You should be incorporated. And as we may have come to find out, we cannot get access to certain programs, certain loan programs. For example, you cannot get a line of credit, a business line of credit, unless you have a business entity such as an LLC or an INC, a limited liability company or a corporation. So before we even get into the taxes, you need to make sure that you are incorporated, that you have your LLC. Full disclosure, we run a company called Badu Entity Formation LLC, and we do help people like yourself form LLCs, INCs, and all the different entity structures out there. We can form them in any state. If you need something formed in a different country, we have our attorney. My partner, his name is Don, and he can help you form the entity in a foreign country as well. So ultimately, before we do business with anybody, and I mean anybody, we need to make sure we incorporate. So when your kids come out the womb and they decide to sell lemonade, please make sure you get that child an LLC, a limited liability company. Because the thing is, if that lemonade, let's just say that one lemonade that child sold for $2, that one lemonade they sold ended up getting somebody sick, well, if the child was the one that sold the lemonade, then that child can be sued. However, since you are the custodian or you have custody of that child and you are the guardian or the parent of the child, that lawsuit can be tied to you as well. So it's very important that we make sure to protect ourselves and to not expose our liabilities. Everything we do from now moving forward should be put into an entity, LLC or INC. So one commitment that I want you guys to make on this call or on this webinar is before you do business with anybody else, if you know you're running business in your name or under your personal name, please reverse that and do business in an entity's name. And by the way, this includes DBAs. You should not be doing business in a DBA or just a DBA, aka sole proprietorship. In the state of Illinois, I believe it actually costs more to run. We haven't set up a sole proprietorship in the past, but it actually costs more, I believe, to set up a sole proprietorship than it is an LLC, which is crazy. And then you have to post in the newspaper for a certain amount of time. I mean, it's crazy, right? With the LLC, you set it up, you get it done, no newspaper, nothing like that. You're simply setting up your legal entity. So anybody who's on this call today, please make sure that you're doing business in your business name and not your personal name. It is extremely important. It doesn't matter what you sell, how much you make. $5, $1,000, $100,000, God forbid, $1 million, and you're not protecting yourself, well, that's dangerous living right there. You need to make sure you protect yourself. So the limited liability company, first and foremost, protects my personal assets. Number two, it's very, very cheap and cost effective to maintain and operate. All I need to do is file my articles of organization with the state that I want to operate in. By the way, a tax planning strategy is to, if you run an online business or a virtual business, nowadays a lot of businesses are virtual, you can incorporate in a different state, such as Nevada or Texas, Wyoming, states that are very, very business tax friendly, unlike Illinois. You can incorporate there and basically set that as your home base. That's your principal place of business. You will completely avoid any state income taxes when you do that. Right, that's a tax planning strategy. That's free advice that I'm giving you right now. That's only for 100% online businesses though. If you do operate like you have a physical presence or you actually do business in a state like Illinois, you do have to register as a foreign entity in the state of Illinois. And you ultimately have to pay taxes on any revenue that's declared as Illinois revenue. So that one is a bit more complicated, but essentially you should have an entity. It protects your personal assets. It basically enhances your credibility. Right? So when I'm working with a real estate contractor or anybody that's doing business on my behalf, I do not work with them unless they have LLC next to their name. Because the thing is, if they get sued for whatever reason, that liability, basically, not only do they lose everything, but if they have something that I own, they might lose that too. So I don't work with anyone unless they have some sort of entity behind them, meaning a service provider, a real estate agent, a contractor, a property manager. One of the first questions I ask in my vet process is, do you have an entity? If they say no, I'm sorry, we can't work together right now. We may be able to work together in a week when you have your entity set up. So if you don't have an entity in place, you need to get one ASAP. All right, we can help you set it up, flat, easy rate. Nothing too complicated. You send us the information. We get your entity set up within 24 business hours. That's something that we can certainly help you do. Right? So LLC I love because it protects my personal assets and enhances my credibility. It's easy to maintain. And ultimately, it's very, very low maintenance and cost effective, essentially. And then also with the LLC, it offers flexibility. You get to choose how you want to be taxed. You can be taxed as a sole proprietorship, where you're a single member LLC, a partnership where you're a multi-member LLC, meaning 2 or more people, an S corporation, which provides tremendous tax benefits, or a C corporation, which you should never do, by the way. So that's the LLC. Then you have the corporation. Corporation can be broken up into 2 types: a C corporation and then an S corporation. So basically, a C corporation is an entity that has what's called double taxation, right? And that when you, like, an LLC is a pass-through entity, right? Meaning that all the income and expenses of the business actually go on your personal tax return through either a Schedule C or a Schedule K1 that's attached to your personal tax return. So you can be literally taxed as a partnership or an S corporation. And some people always tend to get this confused. They're basically like, well, what do I tax, or why is it that this is attached to my personal tax return? And I simply tell them, well, it's because you're a pass-through entity, meaning the income and expenses of the business passes through to your personal tax return, to your 1040 individual tax return. So a C corporation, you don't get this flow-through treatment, so that means you have to pay taxes twice. 1, when there's profit made. 2, when you send money to yourself. No such thing with an S corporation or an LLC that's not taxed as a C corporation. So with the C corporation, it gives you protection. It gives you some nice tax benefits, although there's double taxation, meaning you have to pay taxes twice, basically, or a higher tax rate. And then also it's high maintenance. You have to have corporate minutes, bylaws, and all that stuff. I mean, it's nice to have, but it's just high maintenance. I don't like high maintenance things typically. I like simple. With the LLC, I don't need to be high maintenance. I need an operating agreement, articles of organization, and I'm done. Right? I can take board meetings and board trips to Vegas, Bahamas. I recently went to Jamaica for my last board meeting. Of course, before COVID-19 hit. But you can definitely take advantage of some of these things no matter what, no matter who you are, essentially. Now, S corporation is the most advantageous tax structure on the planet because there's a tax called FICA, self-employment tax. When you have an S corporation, you can get rid of FICA. Not 100%, but you can wipe out at least 75% of your FICA tax. FICA tax is basically Social Security or self-employment tax that you pay when you're a Schedule C or you're a sole proprietorship. With this, essentially, you basically, it's about 15.6% or so that you have to pay, and basically, it's money that you have to pay for Social Security for being self-employed. When you're an S corporation, you don't have to pay FICA taxes on your profits, essentially. So if you made $100,000 profit, and let's say that you decided to become an S corp, well, you can save $15,000. Except the only difference is you do have to run payroll. Right? You do have to declare a small salary. Typically, it's 25% of your profit. So in a $100,000 scenario or example, you're basically saving FICA taxes on $75,000 because $25,000 would be your salary. That amount has to pay FICA taxes or self-employment taxes. So the IRS threshold or the recommendation is basically keep it at 25%. Of course, the IRS themselves won't tell you this, but this is just a tax planning tool, a strategy. If you don't want to overpay in self-employment taxes as an S corp owner, then all you have to do is declare a small W-2 salary, keep the IRS off your back, and save on the self-employment taxes on the on the non-W-2 portion. So you do have to send yourself a W-2. We typically run payroll through ADP, so we do have an in-house payroll provider that assists us. So we actually can do it in-house, but it's powered through ADP, essentially. So that's some of the benefits of an S corporation. If you run an active business, meaning you're an attorney or you're an accountant, something that's active, then you should highly consider becoming an S corp. LLC tax as an S corp, or a corporation tax as an S corp. Typically, the threshold is if you've made $30,000 or more in profit in a given year, then you should definitely consider becoming an S corp. If it's below, so if the income minus your expenses is less than $30,000, then you don't necessarily have to be an S corp, because there are costs associated with being an S corp. For example, if you're using my firm, we do charge you for setting up the S corp, and also this is a big part of our tax planning service that we offer in the firm to help minimize your tax liability to potentially down to zero. So basically, those are some of the benefits of owning or having an S corp. Do we have? Oh yeah, and by the way, big thing, if you want capital, if you want to truly grow your business, you need to have an entity, because the banks will not give you money if you don't have an LLC or an INC next to your name. You can get business credit cards, term loans, lines of credit, SBA loans, PPP loans. If you don't have these things in place, you won't be able to get those funds. Right? You need to make sure that you're incorporating yourself. It can only benefit you, and it also establishes business history or track record for you. So I know that was a lot. I would like to open up the floor, maybe for about 2 minutes or so, if we have any questions during this time. And there is a question that was asked. The question is, would that affect your Social Security payments in the future if you become an S corp? Yes, but keep in mind, we will not receive Social Security in the future. That's just my thought. Somebody my age, at the age of 27, by the time I quote unquote retire, by the way, technically, right, this is one of the secrets out there. Technically, I am retired from a financial standpoint. Retirement means when you're financially free, basically. Meaning that you essentially have enough passive income to cover all of your bills, lifestyle, and all that good stuff. Meaning that you don't ever have to work another day in your life if you truly wanted to. So to me, I'm retired, but the formal or the informal definition, or what society has put as retirement, is you retire nowadays at the age of 67. Well, by the time I hit that age, it would be 70 as the retirement age. By that time, Social Security would have been depleted, right? Because right now, you're talking about a global pandemic where the government is pushing out they've already pushed out $2 trillion plus, right? So who's going to pay for that? Well, we have to pay for it. The taxpayers have to pay for it. So to me, I'm not relying on Social Security in the future. It's not even a thing to me at all. In my retirement portfolio, Social Security is not even existent. So for me, that's basically cherry on top. With that being said, due to this lack of trust in the government, I don't necessarily mind too much about contributing to my Social Security account. But yes, if you're an S corp, you don't have to contribute to your Social Security account outside of your W-2 payroll. So you will receive less money in Social Security in retirement. But remember, we're here to create abundance. We're here to create a lifestyle where we don't need to rely on the government. So even though it is your own money, and yes, you are entitled to that money, and I believe somebody's going to sue the government and ultimately allow some of us to get that money. But the government is quickly depleting from or away from Social Security. By the way, I think that is a conspiracy theory as to why COVID-19 is here in the first place. I believe part of the plan was to kill some of the old people, unfortunately, or older people, or elderly, so that they don't necessarily have to pay their Social Security. But that's just me, right? I don't trust the government. It's good what they're doing as far as PPP, Paycheck Protection Program, stimulus checks and all that good stuff. I tremendously applaud them. But at the same time, I'm just like, you know what? I think this whole thing is a plot, right? To get rid of some of the older people, get them out of the workforce, force them to retire, Unfortunately, some will pass away due to health issues and not have to pay for Medicare and Social Security. Right? So who's paying for the elderly right now? We are, as a young folks. And so with that being said, I believe by the time I retire, quote unquote, by societal definition, that money won't be there. And then the next question is a registered agent required for an LLC? Can you use your home address? Yes, a registered agent is required for an LLC. Yes, you can actually be your own registered agent, even though you might have read somewhere you cannot. If you're not comfortable being your own registered agent, we do provide registered agent services where we will be your registered agent. You can use your home address. So a lot of these things you can do. You can do anything you want in life, practically. But should you do it? I don't think so. I think you should get a P.O. box from your local post office, like the USPS or the UPS, and basically have that address. Now they say you cannot use a post office box as the address, but you can use a P.O. box, period. Right? So you can use a P.O. box, but you just need an address, like an actual physical address that's tied to the P.O. box. Meaning your address cannot say P.O. Box XYZ. It has to say 123 Main Street, and then suite. Typically they'll add a suite number for you. So definitely great questions there. We do have one more. And it says, what if I want to sell candy, lemonade, and tacos as a separate businesses to be housed under one umbrella business LLC? You should not do that because of the way that, well, in this scenario, they're all retail, so they're all related to the same industry. So it's fine to do it. As long as it's related to the same industry, like retail, you can do it. However, if you're mixing real estate, retail, pharmaceuticals, that's a big no-no. You should never do that where you're mixing and mingling LLCs. You don't. So if it's retail, if it's one general industry, like you sell multiple products, then that's perfectly fine to have one LLC channeling all of that. So don't mix and mingle industries, but you can mix and mingle within industries. Like, for example, our CPA firm does tax preparation, planner representation, and some bookkeeping and CFO work, right? That's all accounting services. So it's fine to have all of that housed in one. It's good for branding purposes anyway. But let's move on. You guys can feel free to ask more questions as we go along. But now let's talk about taxes, right? We said this is tax tips for business owners, but we just spent the whole 15 minutes talking about what do you do before the tax actually hits, so pre-taxes. So why you should file? Well, for one, you can go to jail for not filing your taxes. It is true, Al Capone was actually arrested for not filing or not being compliant with income tax regulations. That's the only way they got him, by the way. So if Al Capone can get arrested for tax evasion, then so can you. Trust me. But basically, you need to file because you earned an income. If you earn more than $400 as a self-employed individual, then you do need to file, right? So you need to file. Really quick, let me answer this question. Is LLC tax exempt? Absolutely not. You do need to pay taxes as an LLC. The only tax exempt entity is a 501, basically an entity that's structured under the 501 or the Internal Revenue Code 501, such as a 501c3 and different organizations out there. 501c3 is a non-taxable entity, meaning it's tax exempt. So if you want to go the tax exempt route and not pay taxes, then go the 501c3 route. Of course, there are some legal implications of that as well. We do have a 501c3 known as the Badu Foundation, where we channel all of our nonprofit and all of our charitable work through. And then also, so if you make $400 or more as a self-employed individual, you must file. If you have a W-2 or anything, you should file, or I would say you must file. It helps you stay compliant with tax laws and regulations. You do have to file annually, so everybody files taxes once a year. And you might have to make quarterly estimated tax payments, not necessarily file quarterly, but you might have to make quarterly estimated tax payments because you earn an income or because you're making a profit each quarter. Basically, the IRS doesn't want all their money up, like they don't want all their money at the end of the year or when you file, but they want it periodically, right? Because they have bills to pay too, or the government in general has bills to pay. the Internal Revenue Service or the Treasury Department is in charge of all the money that's going through as it relates to taxes and any sort of funds. It can help you get a tax refund. You'd be surprised how many people don't file and they are actually entitled to a refund. Right? In about 2014, there was billions and billions of dollars, over $1 billion in unclaimed tax refunds. And guess what? If the IRS has an unclaimed tax refund, they can't send it to you unless you file. So they basically keep it, right? So you do have to be very savvy when it comes to this, and you should file, right? And file early. File by February 28th. File by the end of February each year. Just do it, right? It's not, taxes are hard, but if you have somebody to help you, like a tax professional like myself, then it will be an easy process, right? We have a very, very standard process. I advise everybody to file by February 28th because you never know what's going to happen. When these stimulus checks came out, people were just now filing, and we were in April. Some people are just now filing, and we're in May to claim their stimulus or to get their stimulus check. So even though the deadline is typically April 15th, and this year it's been pushed back to July 15th, you should still file anyway, especially if you're somebody that's thriving and growing your career. I know you'll need those tax returns to apply for loans. Like for me, I apply for mortgages all the time. So my tax returns are very well organized in a folder. I can easily, if somebody asks, where are your tax returns? I can just send it to them. And you always want the most up-to-date tax return on file because typically people's income, your money grows over time. So it is something good to do, is just get in the habit of filing by February 28th every year. Most documents, if not all, are out by that time. Do your profit and loss, do your income and expense, do your reports early. That way you can have them out the way. Focus on the next year. I mean, how are you going to know how you perform the previous year if you haven't even done your profit and loss, your balance sheet, and your tax return? And if you're getting a refund, now you're accelerating that money so that you can get it up front as opposed to waiting until the last minute. I have a client who said they haven't filed since, since 2012. We just filed a tax return for them because they hadn't filed since 2012. We actually had 2 people yesterday reach out with those inquiries. I mean, it's crazy. File. Now, even if you think you shouldn't file, just file anyway. You can file a $1 tax return if you haven't made any money during the year. And as we all know, if you don't have a tax return filed, you basically can't get a stimulus check. Stimulus check is about $1,200, and there's another round that's expected to come out. So you want to be ahead of the game, get on the ball. Don't wait until July 15th or October 15th just because they've extended the deadline. You never know what programs are about to come out. Put yourself in a position to be prepared so that you can truly create that abundant lifestyle that you truly deserve and you truly desire. Now, as a business owner, you can write off pretty much all your expenses, right? You're allowed to write off certain expenses to reduce your tax liability. So if your income was $100,000 in a year and your expenses are $25,000, that means you're taxed on $75,000, which is the difference of $100,000 minus $25,000. In order to reduce that number, you have to claim tax write-offs or tax deductions, things that help you reduce your taxable income. So these things include business expenses. In order for a business expense to be tax deductible, it has to be both ordinary and necessary. Ordinary simply meaning that it's in the ordinary nature of your business. It's very ordinary for an accountant to have a laptop. It's very ordinary for a real estate agent to have MLS fees, right? Ordinary things. Necessary means that it's necessary for you to grow your business. It's very necessary for me to do advertising. It's very necessary for me to wear the suit that I can claim as a tax deduction because I'm delivering a presentation so I can look presentable. It's very necessary that all of this technology you see here, I can write it off. It's very necessary for me to take my board meetings in Ghana, Jamaica, wherever I decide to go, because we're a global company and we're expanding every single day, right? So examples include meals, travel, fees, dues. With meals, as long as you're having a business discussion with somebody, it doesn't have to be a full-blown discussion. It can be you and your spouse, and maybe something comes up about the business. How's the business doing? Well, that automatically makes it a business meal, and now you can write off the meal and basically claim it on your taxes. You do need to keep your receipts. So with receipts, you take a picture of the receipt. You simply grab your phone, right? When you get the receipt, write down who you ate with, and then write down like 2 words, 1 or 2 words, what you discussed during the meal. So we discussed taxes. We discussed life insurance, whatever it is. Just quick, real quick, simple bullet point. You take a picture and put it in your in a folder called 2020 receipts. With travel, basically all travel is business deductible as well. So meaning that, let's say you go to a conference or anything like that, that's a tax deduction in itself. If you went to Jamaica on personal travel, but you somehow managed to check emails and we're doing some client work out there, that's a tax deduction right there. The full trip is tax deductible as long as you did, you worked about 50% or so of the time during the work days. They never count. You never have to work weekends or holidays or travel days. So the days you travel, let's say you flew out Monday, got back Friday, you don't have to work Monday or Friday. You can still write off the entire trip. And you can also declare board meetings. So you can have up to 4 board meetings per year. And remember, in order to have a board meeting, you have to have an actual company. This is another reason why entities are critical, because they do expose you to more tax deductions. Fees, so if you're a real estate agent, MLS fees, we'll have a special segment for real estate agents. MLS fees, listing fees, dues, subscriptions, all of those are tax deductible as well. Retirement, business owners are in the best position to save for retirement. You can fork up to about $56,000 a year just for the business owner retirement side, on top of the IRAs or the Roth and traditional IRA, the health savings account or HSA. So ultimately, you can do all of these things. It's very, very critical. Now, business owners, you can also hire your kids. I mean, that's more on the advanced. We won't really get into that today. That's more on the advanced side. But other things include a home office. Right? You can deduct your home office. This is a looked down upon type of deduction. For some reason, accountants got scared at some point to deduct clients' home offices. Or anytime I get a new client, one of the things they ask me is, can I deduct my home office? And I say, absolutely. As long as you have a room like this room here that you're seeing is a home office. I've been here for about 4 years or so. This is literally my place of work. Sometimes I travel and sometimes I go to other places, but during COVID-19, everybody's working from home, right? So your home office, it can be a room that's designated as an office. You see here, there's a printer, there's a logo in the background. I mean, the moment the IRS walks in here, they see the logo, they're gonna get out and they say, well, that's a home office, right? You see awards, you see books. There's no way the IRS can say this is not a home office. You can basically take the square footage of the office and multiply it by $5 using the simplified method, or you can use the regular method. Simplified is more for those who own a home, because you can still claim your itemized deductions, your personal deductions of the home. Regular method are those who rent. So if you rent your home or your apartment, then you can take the business use percentage of the apartment and basically multiply it by the rent, utilities, and internet and all that stuff. So you can truly write off your home office. Now, if you want to get savvy, you can create a lease agreement between yourself and your business where you lease a pretty significant amount of that, right? You can write off a lot. You can create a lease agreement where you're charging your company rent. Now, of course, you have to report as income, but now you get to accelerate some things like depreciation. Any repairs, improvement, all that stuff, you can now put it in a more business landscape as opposed to a more personal landscape. So that just gives you extra home office deductions. That's more on our tax planning side. Health insurance premiums. Anytime you pay health insurance, you can write that off as a business owner, 1/2 of the FICA. So I mentioned earlier that 15% is the self-employment tax rate. Well, you get to deduct 1/2 of it, which is called an adjustment. So effectively, in reality, you pay about 10%. It comes out to about 10% that you're paying extra if you have a sole proprietorship versus an S corp. So always consider being taxed as an S corp. The last slide of today is getting organized. Right? QuickBooks is really, really good for helping you guys stay organized. I'm on a QuickBooks council, so I do make decisions for QuickBooks, how it looks, feels, and all that. We actually have a council meeting coming up next month. We usually go to California, but of course, due to COVID-19 and the stay-at-home orders, we cannot go to California this year, and this is my last year on the council. So if you guys ever have any feedback or anything you want to improve with QuickBooks, just let me know, and I'll be sure to pitch it to the council. But QuickBooks allows you to automatically download and categorize transactions, participate in online billing, create professional-looking invoices and estimates, upload receipts, create customized financial reports such as balance sheet and profit and loss statement, and ultimately track inventory. All of that in one full-blown package. The pros is that it's a full-blown accounting software. It has a very professional look and feel. It's rated the best software according to surveys and studies. And then plenty of discounts offered. So it starts off at about $7 per month. Right, that's for the self-employed version, especially if you're with a pro advisor like myself. And it saves business owners on average about 10 hours every single month, which is quite a lot of time. Right, if you're an attorney making $500 an hour, that's $5,000 every single month. That's $60,000 in a year. That's enough to buy your rental property. At least contribute towards the down payment of a rental property. The cons with QuickBooks, it does require some training to get used to the look and feel and all that good stuff. So it does require some sort of training, but ultimately it has great features and is able to do everything you need it to do. Thank you guys for being a part of this. Here's my contact information. You can call me 773-679-7198. Once again, 773-679-7198. You can email me at jb@badutaxservices.com or jeffbadu@gmail.com. You can feel free to reach out to me with any questions, anything you want to go over. But at this time, we'll love to open up the floor for any questions. I'll start with the ones that I saw first. And let's see. Question here is basic plan good with QuickBooks? Yeah, you're fine. I mean, especially if you're like an Uber driver or you're a single solo shop, then yeah, you're perfectly fine with just a self-employed version. If you are like an S corporation or a business that has employees, then you cannot use the self-employed version. You have to use something such as the Essentials, the Simple Start, or the Plus version. So yeah, if you're a solo shop, like a single solopreneur, then that's fine. But if you plan to expand and grow your business, then you definitely need the more advanced packages for sure. And then we have a question. Yeah, absolutely. Appreciate it, Jillian. So if you're a single member S Corp, then you should have at least the Simple Start version. You cannot use self-employed version. If you're an S Corp, I mean, you can get away with it, but if the IRS were to audit you, you might fail the audit because they know the self-employed version does not give you all of the information that they need in order to conduct their audit. I'm not saying you'll be audited, of course. Any other questions, comments? For those on Zoom, you can feel free to unmute yourself to ask a question, or you can put in the chat box. Those on Instagram, on Facebook, you can just type in your question. We got about 5 minutes left for Q&A, and then we'll wrap it up. Thank you guys for being a part of this. Remember, the book Infinite Expansion is out. So Infinite Expansion, How to Infinitely Expand Your Vision of Abundance, is out right now on Amazon. You can type that in on Amazon and get the ebook. It's $4.99, right? It provides you the tools and the techniques and the mindset you need if you want to truly expand. And it's just ironic that it happened to be published during our toughest time, which is COVID-19. It was literally written before COVID-19. However, it was released during COVID-19 because I didn't know what was going to happen. But I said, you know what, let's write a book that can truly, truly help people and truly expand their minds to infinite capacity. Right, to the point where you can think so far that you can't even think anymore. So definitely check out that book. The official announcement will be made next month. Tomorrow. The official announcement will be made tomorrow. So we'd definitely love for you guys to check that out. All right, so we do have a question here. How do you recommend self-employed individuals prep for paying taxes later, which percentage? So you should be paying your taxes quarterly, right? Every quarter. Quarter means every 3 months in the year. And you do need to make sure your QuickBooks and your profit and loss is up to date each quarter. You go in there and you take that number, the profit number, so income minus expenses. It's typically 20% for federal. And then if you're in a state like Illinois, it's 5% for state. Or if you incorporate it in a state like Texas or Wyoming or Nevada, then there is no state tax basically in those states. So the percentage is typically 20% for federal. You know, if you're a real estate agent and if you own real estate, then it might be 0%. We'll cover that during our next segment. So we will have another tax tips webinar. We do one once a month. Next time, we'll actually talk about COVID-19, like financial resources. But then after that, we'll get into real estate investors. Then we'll get into real estate agents. If you have an industry that you feel needs specialized attention, I can do one for you. I can also speak for your company as well, in case you have employees that may benefit from this or contractors. So hopefully I answered that question. It's typically 20% that you withhold. Any other questions or anything like that? Let me see. Yeah, we'll do last call for questions. Thank you guys for being a part of this, by the way. It's always great to see that business owners are thriving and business owners are still moving along, keeping the American dream alive. Question here is, what is your suggestion? Should tax office owner be preparing their own company tax? I would say yes. If you're skilled in tax preparation as a tax preparer, I mean, I prepare my own set of taxes, then yes, you should be able to prepare your own taxes. Absolutely. Now, maybe another question is, should you do your own taxes? Absolutely not. Especially as a business owner. I mean, you could be missing out on so much money. I mean, I have clients who text me and call me all the time saying, hey, I just went on TurboTax, I did this, was it right? And 9 times out of 10, it actually wasn't right. And now they have to amend it or they have to make changes. Just an annoying process for them. Instead, having it professionally done by somebody who's qualified and reputable. So you should not do your own taxes, especially as a business owner. But if you are skilled in taxes, then you can certainly do your own taxes. So we'll do one last question, last call for question, and then we'll just wrap it up for the day. Remember, this will be recorded, so you guys can pretty much catch the recording. Question here is, filed as S Corp 2.5 years late. Didn't realize my business was classified as a corp. Do you think I'll be okay? I mean, you do get a one-time penalty waiver, right? So if you file your taxes late, you do get a one-time waiver. The penalty, by the way, is $200 per month per shareholder. You know, so that's about $2,400 per year. But at least one of those years you'll get waived automatically. And the second year, that one is almost impossible to get waived. So you will be okay the first year, but the second year, I can't guarantee you the same. All right, so that's pretty much everything. It is 1 o'clock on the dot. Thank you guys for tuning in. Let me go ahead and stop the recording on Zoom. Thank you guys for being a part of this. If you need anything, please let me know. Please call me, 773-679-7198. Ask me any questions, any insights, anything you need. Be more than happy to help you guys out with anything. So thank you guys once again. Let me go ahead and end the recording on, let's actually start with Instagram. So thank you, Instagram team. Appreciate that. And then let me go ahead and end.